Well, yeah, certainly headwinds in terms of exports. Most of the recovery that we've seen portrayed in the developed world has come through the service sector. So that big push through of export growth is really not materializing for China. So that's making life a little bit more difficult as China shifts gears and tries to focus more on internal factors to drive economic growth. So that's number one. Second is you mentioned reforms as well. It's a little bit obviously too early to be predicting where the growth is likely to occur as a result of the reforms, because we've only seen a very high level announcement and a little bit more detail thereafter following the third plenary meeting of the Communist Party. But I think the market's starting to look through the rhetoric and try and anticipate where the policy will be implemented. And what we're likely to see as a result is a re-rating in certain sectors, because coming into the second half of this year, a number of sectors have been derated by international investors, pushing prices down, expecting some negative outcomes from some policy reform measures. And now there's a little bit more detail and emerging clarity in which sectors are likely to perform better than others in terms of being beneficiaries of that reform program. We're probably going to see going into 2014 some differential performance across different sectors, and also some opportunities to outperform in an absolute sense. In terms of the economy, this year's pretty much cooked, and overall in line with the government's forecast, somewhere around the sort of 7.5%, 7.8% GDP real growth for 2013. I've started to see economists upgrade or increase their forecasts for next year slightly, pushing it to the top end of the 7 percentage points towards 8%. There might be some opportunity for that, and it's still a little bit too early to determine exactly how far the reforms will go. The big impact, of course, in terms of pricing has been in the banking sector, in the financial sector, and that's had a flow-through effect onto Hong Kong. If you look at the Hong Kong equity market, for example, it is trading at a discount to other markets across the region. So if we scroll forward into 2014, the likelihood is we're going to see a better performance on a relative basis of the Hong Kong market as some clarity starts to emerge around some of these reform measures, and the discount that's applying particularly to the financial sector here in Hong Kong and more broadly across the market starts to be eradicated, and the market will typically in this type of environment do a little bit better.